Hello, everyone. Good morning, good afternoon, and good evening. And my name is Coşkun Cangöz. I am the Head of Government Debt and Risk Management here at World Bank Treasury. Welcome to World Bank Treasury's webinar series on public debt management. We usually organize 4 webinars in every calendar year, but this year it's an exemption. So this is our 5th webinar, actually, that we are organizing. And it is about blockchain technology and how we are, as the debt managers, going to use this technology while issuing government securities. So since the topic is quite interesting and excited, so we decided to organize another webinar this year. And as all you know, we read a lot, we listen a lot about the blockchain technology, how it can change the world. And of course, there are some potential everyday uses that we heard always. It can be some smart contracts, it can be payment processing or proof of ownership, including the real estate and copyright, authenticated voting, and we even heard about the first blockchain wedding. So many of us started asking why we are talking more on the blockchain technology and how this technology may affect our business. So as the debt managers, of course, we are simply asking what is in it for us. So fortunately today, we have colleagues from the World Bank Treasury with us who issued the bond this August in 2018. And bond is the world's first blockchain bond. And also we have a colleague from Austrian Treasury. They started using the blockchain in the bond auction since October this year. So we can answer some of these questions in today's webinar. But the webinar, of course, will not focus too much on the technical aspects since it can be a bit complicated. So then the questions will be more around the possible use of this technology from the issuer's point of view. And also we can discuss, as I said, what can we do with the blockchain technology in our daily business. So since the technology is new and development is rapid, of course, it will be a good opportunity for all of us to learn more about this technology and its daily use. So I would like to thank my colleague, Mats Filipsson, who organized this webinar today. And now I will hand over to Mats just to introduce our participants, our speakers, and moderate the session. Thank you, Mats.
Thank you, Coşkun, for this introduction. And before we start the presentation, I would just like to present the speakers around the table. And we have here Ms. Andrea Dore, who is Head of Founding at the World Bank Treasury, and Mr. Paul Snaith, who is Head of Operations for Capital Markets, Banking and Payment, also at the World Bank Treasury. And we have also, but not around this table, Mr. Markus Stix, who is Managing Director of the Austrian Treasury and the Debt Management Office in Vienna. Markus will join us remotely by phone later on in this presentation. So, start now with the presentation, and I have decided to start with presentation from Andrea, who will start to present a little bit from the perspective of the front office.
Thanks, Matt. Thanks, everyone. I want to say good morning to everyone, and I guess probably good afternoon for those in a completely different time zone, and it could also be good night as well. What I want to do, we only have, I think, about 15 minutes on my side for the presentation, is to really walk you through the transaction that we did on the blockchain platform. We do not have time to go through the underlying technology, so it will just be focused on the transaction, and then I'll pass it on to my colleagues that would speak more broadly in terms of the benefits that we see, not only from a capital market perspective, but more broadly in terms of the World Bank and the World development work. Blockchain, I guess, it seems to be the buzzword. that, in any corner that you go these days, you're hearing something either related to blockchain. Earlier this year, in fact, last year, the bank launched, in June 2007, the bank launched a blockchain innovative lab. And basically, the main idea was to really build on the understanding of blockchain and see how it can be applied on the capital market side, and as I mentioned, on the development front as well. Part of that setup, we decided to look into exploring launching a potential blockchain bond. So over the last year, we have worked across the bank with many partners. Actually, we partner with CBA, which is a bank in Australia, some of you may be familiar with, that also have keen interest in the technology and have also have a blockchain lab on this side globally as well. And the key purpose was really to see how we could launch the first blockchain bond. We were working across many groups because it was one of the first projects actually that I, as head of funding, worked across several groups outside the finance complex, particularly on the technology side. The idea was basically because it involved not just issuing the bond, it involved really being able to build the platform that the investors would be able to access to be able to put in the orders. The bond that we issue, you see the name is called Bondi. Bondi, there are two play on this name. Bondi is the name of a popular or famous beach in Australia, and it's also an acronym for Blockchain Operated New Debt Technology. So that's why the acronym called Bondi. So in August of this year, we were able to issue this Australian dollar 110 million bond. It was the first bond that was legally binding bond operated on a global blockchain platform throughout its life cycle. There have been a number of proof of concepts that have been done in the past by various institutions, but this was the first time that a bond was created, registered, allocated, and transferred on the blockchain platform. I will walk through the process. Basically what it is that this platform, this blockchain platform, and I don't want to go too much into the technology, was developed with CBA, and where they run what you call two nodes of the platform run in Australia, where you also had two nodes run in Washington, D.C. So the blockchain platform is operated by World Bank as well as CBA. So it's a distributed ledger, and for resilient purposes, we decided that we were going to have two nodes for resilient purposes in Sydney and two nodes in Washington, D.C. So the bond was launched on this, it's a private permissioned blockchain platform. And basically what it is the blockchain layer, and above the blockchain layer is an application layer, where for you as debt managers that are familiar in terms of bond issuance processes, I will just walk you through what we're able to do in terms of the investor experience using the blockchain and the experience on our end. So investors were able to put in the order through an authenticated key, enter the bid on the platform through a web-based interface. You know, the World Bank was able to observe the book building process in real time, which is different to the traditional system where we launch a transaction and we have the underwriters who would send through maybe messages through Bloomberg to the investors and take the investor's order, and that order would be either be sent through an Excel spreadsheet or through a book building system. So you had those three layers when it comes to transaction and investor putting in an order for transaction. In the case of the blockchain platform, what we were able to eliminate, the investors were directly able to put their order on the platform, and we could have seen this order in real time. We were then able to finalize the pricing on the transaction. Investors had the opportunity to update the bid, make adjustment to the bid based on changes either in the book building process or as we changes in terms of updates on the pricing of the transaction. Now, I'm not going into details in terms of the transaction pricing, and I'm not going into details in terms of the flow, because I'm assuming as debt managers, you already have that background. So I'm just focusing on the blockchain component of the transaction. Investors, so we were able to communicate directly with investors through the online communication, the application layer of the blockchain. We were able then to allocate the investors, allocate the bonds, and in real time. So when we do the allocation, investors were able to see in real time the allocation that they've received. The bond was then registered on the blockchain ledger, so the transfer in terms of the ownership of the bond took place on the ledger. Typically, when we're very active in the Australian market. So typically, when we do a transaction, we would have the registrar, which would be the RBA in that particular case. In this case, the registrar was on the blockchain. So the Reserve Bank of Australia, was not involved in the transaction like they would be in any typical transaction. So both the paying agent as well as the registrar exist on the blockchain. So CBA acted as the registrar, so the transfer of the security was done on chain. One of the things I should point out, the actual cash settlements of it was done off chain, and it was done specifically for a couple of reasons. One, we thought to reduce the risk component to the transaction. We wanted to do it in two steps. One, to be able to transact on the blockchain without having to worry about the cash component. Two, we also explore possibility of having doing the cash on chain, but that would involve either having some sort of cash equivalent, like say a potential like a token, a cash token, that would allow us to settle the transaction, the cash component of the transaction on chain. So we discovered in the process, particularly in that case in Australia, if we did that, there is a tax that would be imposed on token transactions. And what I mean token transaction, it would be a one-to-one. We would basically, if an investor has $50 million, would get 50 million worth of tokens that would be able to transact the settle the bond. So because the Australians see it, or the sisters see it as an FX exchange, there was a tax on it. So we decided that it made sense for operational risk reasons to leave the cash settlement off chain. So this gives you sort of a quick summary. We saw many investors, typical investors that would invest in our bonds, part of these transactions, official institutions, insurance companies, asset managers, as well as banks. What we plan to do, this is basically we build a platform to have this primary issuance of the bond through the blockchain. The next phase, what we are working on now, is to build what we call the secondary market component of the platform. Basically, to increase liquidity in the transaction, we will be having more market makers on the platform, because CBA acted as an underwriter as well as the platform operator. We will bring in more market makers that will be able to increase and build on the ecosystem on the blockchain itself, and where investors would not only be able not only be able to buy through the primary market on the blockchain, but also have the opportunity to be able to sell their holdings or participate in the secondary market on the blockchain. This blockchain bond was, like it's the world's first transaction, globally transaction, to be, as I said, created, registered, and allocated and transferred to the blockchain. And what we managed to do for this transaction is to really understand, which was the key. We wanted to understand the technology and understand the broader use of the technology. At this point, what I will do, I will pass you on to my colleague, who will go through, what we learned, in terms of the efficiency, transparency, automation of the system on the operation side, and also the potential for broader use of the technology in the development space.
Okay, thank you very much, Andrea, for this very good overview of what we are talking about. And I know, from my point of view, I know a little bit more about this bond after your presentation now, since it's interesting, I have to say. So now, Paul, please, now the floor is yours to continue this discussion.
Thank you. And thanks, Andrea, and thanks, Matt, for this conversation. I'm going to start with sort of a brief description of the structure of fixed income markets, because I think it might help understand some of the implications of this transaction. Andrea has described nicely many of the features of a blockchain instrument. But if we think about, let's just look at Australia. As Andrea mentioned, the Reserve Bank of Australia holds the register for fixed income instruments in that market. They are connected directly to Austria, which is the clearing system in Australia. Austria is owned by ASX, the Australian Stock Exchange. Excuse me. And Austria itself is then connected to all of the custodians in that marketplace. High-speed connections between the custodians and Austria help ensure information moving backwards and forwards. Connected to the custodians are the broker-dealers, behind them asset managers, investors, and so on. All of this structure is overlaid by sophisticated information systems, Bloomberg providing pricing and other information, Reuters similarly. There are trading systems which overlay this. Embedded within this structure are sophisticated systems to perform netting, so that we don't have gross amounts of liquidity sloshing around in that market. But it's a complex structure, and it pretty much matches what you would see, say, in Europe or the United States. The United States, it's one key part of the fixed income market would be DTC as the register. DTCC is the clearing corp, and then the same familiar names on the custody side connecting to the rest of the marketplace. In Europe, you have Euroclear, Clearstream in that clearing role. But these structures, the structure of the market is quite common around the globe, jurisdiction by jurisdiction, and many of the players are quite similar. The description I've given is necessarily rough. I think it's quite hard to find the detail about how these markets are structured. They're really quite opaque, even though we have this broad brush sense of how they're structured. One way of looking at the Bondi transaction, which Andrea described, alongside this large market I described in Australia, we now have a tiny market. I'll put that market in inverted commas, because we shouldn't. I don't think we should really call it a market in a legal sense. But it's this tiny market which has a single instrument on it. This 2-year instrument that we issued August 23rd, if you can keep this image in mind, I think it might help as we discuss some of the potential implications of the transaction. So first of all, we have to note that it is just one transaction. on this blockchain-based register. As Andrea mentioned, all of the payments are still using normal channels, and we'll perhaps come back and talk a little bit more about that. But in this, having this instrument on the blockchain, our investors essentially hold these assets directly. And I think that's a very important point to notice. It's not necessary to hold the assets through a custodian. They hold the instrument directly on the platform itself. And I'd encourage you to sort of use your imagination to think about this, think about a future, and I'll sort of throw out some descriptions just to get your thinking going. I can easily imagine several years from now investors holding assets on several different blockchain-based platforms and aggregating all of that information directly themselves using overlaid information systems that give them an accurate picture of all of their holdings in different environments, but not holding those assets through custodians and current structures. Inherent in blockchain technology is the notion that it is a trusted record. Blockchain implicitly chains records together. Each block is connected to the prior block and the subsequent block by a hash that establishes that the historical record cannot be changed without the entire network knowing that it has changed, and that's what gives the technology this notion of trust. If a record of a holding of an instrument can be trusted on a central register like this, the necessity for reconciliations will diminish, if not disappear. That potential for each holder of assets to be aware of their holdings, for regulators to be aware of holdings, for regulators, if they participate in these chains, to be able to see all activity that's occurring on a blockchain, all become possible. I'll give you one example. As we were going through the book building process, as Andrea and colleagues were working with the investors on this particular transaction, one of the potential investors dropped out at the last moment. And they dropped out because they had realized they had an internal rule relating to the holding of superannuation fund assets. And that rule stipulated that those assets must be held at a bona fide custodian. And as they got closer and closer to issue date, and they were deepening their understanding of the platform, and as this awareness became clear inside their own organization, they suddenly realized they weren't able to be an investor in this particular issue because of this internal rule. So that was a significant thing. We were sad to see an investor drop out. But the message, the learning that came from that exercise was really quite powerful because it drives home this notion that it may be possible in the future to hold assets directly, emphasizing the potential for disintermediation inside current market structures. Andrea spoke of the digital orchestration of multiple parties being able to see the book building in real time. I'm not often on the trading floor, of course, but there was absolutely a frisson of excitement as the book was building up in front of us, seeing the investors come in. That may not be totally associated with the potential of digital ledger technology, but it was, again, indicative of the potential for investors to get a much more real and intimate connection with issuers without other parties in between. Another point which I will make is inherent in blockchain again is this element of trust, immutable, append-only record, will inherently provide a higher quality of data than the replication that exists in current markets, where you see information from one custodian having to be reconciled with the clearing system with another custodian, that custodian with perhaps a broker-dealer, an asset manager, and so on. All of those reconciliations as transfers of securities occur through a buy and a sell are the elements that add up to settlement being measured in days, T plus X in days. The current market structures, which work beautifully, but are inherently slow. Perhaps we don't sort of realize that the current market structure is slow because we're so used to it. But this transaction again indicated that there might be the possibility of really changing settlement times. Andrea discussed the potential for what we sometimes refer to atomic settlement, or having smart contracts to settle a transaction. If the issues of digital currency can be resolved, if digital currencies can be made available by central banks, then the potential for the ownership of the security to transfer simultaneously with the transfer of the digital currency, we really could see settlement taking place in T plus X, where X is measured in seconds. And that in and of itself would be a great advance for fixed income capital markets. As Andrea said, there was no digital currency, no central bank digital currency that we could use, and tokenization had all of the problems of tax that she mentioned. Similarly, we briefly considered cryptocurrencies, but they are illiquid, too volatile, and the consensus methods are associated with very high energy use and carbon emissions, all things which are anathema to us, the World Bank. So for those reasons, we would not consider using crypto to facilitate rapid settlement. We are, as we move forward, Andrea talked about the various enhancements that we're looking to put on this platform to continue our learning. We've already got market makers on the platform. We're looking to see secondary market trading occur on the platform. But we have been surprised. We knew this was going to be a significant transaction, but the level of interest which we've had in it has really been extraordinary. And while we have no clear sort of plans beforehand, just to give you an indication of the kinds of conversations we've been getting, there are quite a few parties that have reached out asking whether or not they could join this platform or participate in the development of a larger platform. We've had conversations with folks that are looking closely at how this technology might be able to connect investors with issuers more clearly. So there's a gravity that's developing, a weight of interest in how this technology could apply in different components of the current fixed income marketplace. I want to be clear again that our transaction with this single bond on it, this single bond on this little market, this tiny market, is very different from the enormous scale of the broader fixed income markets. And I think there'll be quite a bit of time before we see fundamental restructuring. We don't have a sense as to whether or not the entrepreneurs and the innovators will start bringing in new functions and facilities in this market. We don't know if the existing players will start reforming current structures. I recall the CEO of DTC has indicated that the only entity that will disintermediate DTC is DTC, which is sort of a statement of intent that he realizes the technologies could have a fundamental impact on fixed income markets, and he's determined to keep pace. Quite recently, I think along with Accenture, DTC had performed a capacity test to confirm that digital ledger technology might be able to handle the volumes that DTC handle each day. And it was apparently a positive test that did achieve the throughput needs that they would have. I think that's an indicator of an existing market infrastructure provider making significant investments to make sure they're abreast of how this technology could perhaps change their own offerings. We know that many of the investment banks and custodians that operate in these markets are also making investments to stay abreast of what the technology can do. One of the reasons we thought it was time for us to try and explore and learn from this technology, looking at the Australian market, the Australian Stock Exchange had chosen in 2016 to replace their equity settlement system using digital ledger technology. Excuse me, I'm losing my voice.
Yes, please.
Thank you so much. So the equity settlement system is part of national infrastructure for settling equities in Australia. In 2016, it seems like an age ago in terms of this technology. Yet they were quite confident in the technology to be able to replace fundamental market infrastructure with it. That was a signal to us that the technology is clearly advanced enough and has demonstrated capacity to help and change markets. What we don't know is how quickly they'll change, where that change will be driven from, whether internally or externally. But I think this is something that all of us, all of you, should try and keep an eye on, as changes to these market structures will have a fundamental effect on how we conduct our own business. I shall stop there, see if we have any questions. Pass it back to you, Mats.
Yes, I will just grab the mic. Thank you very much, Paul, for this very good overview of, so to say, the possibilities and the problems of using this technique, and also what the possibilities for the future could be. We are waiting for Mr. Stix to come in from Vienna in Austria. And while we're waiting, we can take the time to have the possibility. We have 4 questions coming in that we could start now to answer. And these 4 questions for Paul and Andrea. And let's say that, should I read out loud the first question?
Actually, what you might do there, Matt, I'm looking, the first question and the second question are essentially the same, but you could speak to those.
Yeah. So let's start with the first question, which is, what is the value add of the blockchain tech versus a platform built with another database system, like, for example, Oracle?
Yes. It's a very, very good question. I think it goes to the heart of what blockchain is. The current markets, with all of their participants, essentially do have what's been described in the question, which is Oracle or similar database technologies with databases supporting the information that's necessary for that participant in the market to conduct their business. So if it's a custodian, they need to maintain records of all of their customers and clients. They've got to be able to link the holdings of all of those customers to the records that are held on the clearing system. They have high-speed systems that connect to the clearing system, and they keep the information of those holdings and the ownership in both places. Austraclear keep it within the clearing system. The custodians keep it within their own environment, and they provide reports to all of their clients about assets held, what's settled, what hasn't settled, and so on. And that Oracle technology embedded in the question sort of describes the current markets. The thing which sets the blockchain apart is the immutable append-only characteristic that it is a trusted record. If a trusted record is properly created and placed on a blockchain, it cannot be altered or modified by anyone else, and it presents the opportunity for participants interested in that information to simply refer to it, to point to it, rather than to maintain their own copies of everything that occurred. Now, how these changes may manifest themselves, as I mentioned, we don't know. There'll be steps taken by current market participants that will be changing things. There'll be steps taken by entrepreneurs and other innovators outside of current market structures. We'll see what happens with that. There are some very large consortia of technologists, such as Hyperledger, which have a lot of technology firms and financial firms backing their development of systems to support the development of applications. There's another one called R3, which have a technology product called Corda. That consortium is funded and supported by all of the current participants in the financial markets. There are the public ones, Ethereum, for example, Bitcoin itself. That's sort of at the anarchist side of these large consortia. But each of these have communities of developers that are looking to build new applications to see how this potential for this trust machine, this ledger which can hold a record that everybody can believe in, might change some of the structures of the market that are currently necessary. I hope that answers that question.
Yeah. The other two questions, I guess the third question, Paul have touched on it in terms of the trust. One of the questions is that why is trust issue so important? I guess in the financial world, it's absolutely important because we're dealing with financial instruments. We're dealing with moving potentially billions of dollars. Yes, this is a small transaction of $110 billion, but this is just an example to see the potential of the technology, and hopefully it will be something that will be taken up more broadly in the capital markets. In the exchange and clearinghouses trusted, yes, because we're still using them. They are trusted, but we're saying if we move to this technology, one of the characteristics that it must have is to be able to have a system that is trusted because we're dealing with financial assets. So in addition to the trust, we mentioned the other advantages, which was the efficiency, the transparency, the fact that you're able to, you don't have the need for massive reconciliations across the various clearing systems and custodial. So this is where some of the key benefits and why trust is important in that particular case. The last question is related to the additional cost that was incurred to use the blockchain versus other methods. We're actually still, I wouldn't say struggling, but we're actually still trying to cost the transaction. When I mean cost the transaction, because there are some additional areas or additional groups that had to work across to be able to get this transaction. And for example, we worked a lot with our technology colleagues, and not just our traditional technology colleagues in the finance space. We worked with our technology colleagues on the web colleagues. We worked with our colleagues on the security, especially that was very important. We work with our security, our colleagues on the cloud infrastructure. Because I mentioned at the beginning that we actually host 2 nodes of the blockchain in Washington, D.C. So it was not just working with our finance and our traditional colleagues. CBA did the heavy lifting when it comes to the actual development work. We worked with them very closely in the design. We worked with them very closely in terms of testing the technology because it was important for us. It's a World Bank bond like any other bond, and we wanted to make sure that even though it's through the blockchain or it's done on the blockchain platform, that the same level of comfort that investors have when they buy a traditional World Bank bond is the same level of comfort. It's a AAA rated bond like any other World Bank bond. So we worked a lot on in terms of these are the additional things that would do that's different to a traditional transaction. So these were the additional cost items, I would say, but the focus was really trying to understand. We haven't put a dollar amount, and that's what we're actually working on now. But the real value for us was really to understand the learning component, to understand the potential of the technology to be used more broadly.
I think if I could add to that, Andrea, so I agree. This particular transaction was a learning transaction for us. It was real, but the act of doing has enabled us to learn a great many things. There's a considerable amount of effort getting a new transaction off the ground. That would distinguish it from a future steady state. We can't predict what that steady state is going to be, but if reconciliations, just to take that one item, if many of the reconciliations that exist in the market today are wrung out of the system, I think it would drive quite a bit of cost out of fixed income markets. The replication of data, the amount of technology, the systems that are required to keep track across all of the current market participants will be reduced. So I think it's possible to suggest, or I would go as far as to predict, that the costs inherent in the market today in relation to reconciliation will be wrung out of market structures. The transition costs would be a different element, and everybody getting up to speed with how this technology works obviously would be a cost up front. I don't think we can draw any significant lessons from this transaction. We don't like to call it a pilot because it's a real instrument, but the lessons of it is what suggests that market structures might change in the future.
Okay, thank you very much, Andrea and Paul, for answering these two very interesting questions. And we will now, I hope, continue to Vienna in Austria and connect ourselves to Mr. Markus Stix. Are you there, Markus?
Yes, I'm here.
I am very happy to hear you. And welcome to join our webinar here. And Mr. Stix is Managing Director of the Austrian Treasury. And from my understanding, Markus, you are responsible for cover all market-related activities at that management office, including liquidity management and capital markets.
That's right. Yes, that's right.
Good. So welcome again, Markus, and please start.
Yeah. Okay. So hello to everybody, and thank you for the possibility to present to you today Austria's experience in using blockchain at government bond auctions. Let me give you an overview of what we did at our last RAGB auction on October the 2nd. It was the first Austrian government bond auction using blockchain technology. To our knowledge, Austria was the first sovereign issuer in Europe that has done this so far. Over the last year, OEKB, as the auction agent for our bonds, has implemented a blockchain of validation for reports which are sent to all our auction participants post-auction. So in addition to that, the integrity of the entire happening during the auction process, which includes the activities of the primary dealers, as well as ours, is now guaranteed by using blockchain technology. Why have we done that? The implementation of this blockchain-based solution was motivated by the desire to improve the process by which auction data can be authenticated by the primary dealers. The dealers can now check themselves the authenticity and the integrity of their reports by calculating the hashes of the reports and compare them with the hashes stored in the blockchain. So we use a blockchain-based data notarization service to encrypt documents in order to get the unique electronic fingerprint known as the hash. This hash is uniquely assignable to the original document, but conversely does not allow conclusions to specific data content. For security reasons, only the hash and not the actual auction data is stored in the blockchain. This means the original document can be stored securely in our computing systems and the authenticity of the document is guaranteed. The auction procedure, including clearing, settlement, and data storage, has remained fully unchanged, using existing high standards in terms of security and data storage. But this new feature now offers an additional step towards strengthening trust and transparency of Austrian government bond auctions. So auction participants were and are not required to adapt their IT systems in order to participate in the auction. So the bond issuance, the legal issuance itself, is not done with the blockchain technology. We made this clear to our primary dealers ahead of the auction. And since 1998, the entire auction procedure has been carried out electronically. So blockchain technology now further secures the existing Austrian direct auction system. This blockchain-based validation process will from now on be used in every upcoming Austrian government bond auction. And further improvements are already planned. For example, an online verification tool for auction participants will be presented at our annual primary dealer meeting next week. So this additional layer of security helps to underpin confidence and trust in the auction process and further strengthens the good standing of Austria on the capital markets. It also contributes to the goal of the Austrian government to engage in pioneering innovation activities in the fintech area. So hopefully this has been for some interest for you, and thank you for your attention, and I'm very happy to receive questions on the topic.
Okay, thank you very much, Markus, for this view from Austria and what you have done using the technique. We will now continue to the question and answer session. We have already started a little bit before you went in, but we will now continue this one.
Maybe you can start with.
And we have a question here for you, Markus. Mm-hmm. I have to read it out loud now from the computer here. Mm-hmm. Yes, your last point emphasized the additional layer of security. Do you see this technology replacing the current methods of registering securities and auction data in the near future, or more indeed like an additional tool to improve security and information sharing? So the basic question is, do you see how this will be continue a development around this technology, or it's just that it will be something that will be just addition and some kind of addition to the existing technology?
At the actual stage, I think it's an additional, but we expect for the future to continue as a new technology. And if you look at the plans, also in Austria, we have an advisory board, a fintech advisory board established from the Ministry of Finance. So there are a clear goal and a clear focus about the future and how to overcome regulatory hurdles, because it's clear actually we need a signed global certificate in Austria, and I think it's nearly in the whole Europe, to issue a bond. And I think there is really a lot to do to change laws, to discuss on an open way with all the participants. If you look at the regulatory, the Ministry of Finance, all the commercial banks, the lawyers, to push more evolution on the technology and the possibility to issue.
Okay, thank you very much, Markus. There's a lot of questions coming in here, so we continue directly with the next question. And now we have a question for Paul. And given that the information is distributed among the nodes or the participants, would this not consume a lot of data and electricity?
Excellent question. I think everybody knows that one of the drawbacks, perhaps, to say the Bitcoin blockchain, or perhaps not a drawback, but as an example, the security of the network is maintained by these very difficult to solve puzzles. So those cryptographic puzzles solving them consumes a lot of energy, and that is the source of security on large public blockchains. Something which I think is still to be determined. I mentioned a few of the consortia working in the finance area. I'll mention Hyperledger and R3 with their product Corda. These are two blockchain-based technology environments with a lot of developers and developing companies associated with them. They are essentially permissioned blockchains that have, so you could call them hybrid. If Bitcoin is sort of the purest idea of an independent blockchain, the Corda or Hyperledger blockchain is a permissioned hybrid, which would reduce the amount of electricity and energy use to maintain consensus within those networks. Being permissioned to do different things on the environment simply changes the energy use question of the blockchain. We still have to see how applications will be developed in these environments and how large they may be. But the potential for huge electricity use, I think that there's quite a few people working to solve that problem. And it'll be achieved. We don't think there's going to be a significant increase in energy usage on permissioned chains.
Okay, thank you, Paul. I'm glad to hear that we could save energy also in this role. The next question is about investor relations and so on, and it's for Andrea. And the question is, you showed in this transaction, and you told us that you could, during the book building process, see how the investors come in and the breakdown of investors. So now it's some questions around this. The first one is, it's significantly different from what you can get with a, so to say, regular issue in the Australian market. And connected to that question, did you see any more did you see that the more, so to say, conservative investors, like official institutions, were more reluctant to participate in this transaction? And the third question related to investors is, how different was the investor relations activities this time?
Thanks. On the investor side, the first question is that the investor breakdown was not very different to what we've seen on traditional bonds. We always have a significant support from official institutions, and we saw the majority, almost 40% of the transaction was placed with official institutions. We saw 18% with asset managers, 18% with insurance companies, which I think the insurance company component was slightly higher than what we've seen, and banks 27%. So we don't see a significant difference to what we have seen in traditional transactions. So it was very diversified in terms of the investor base, which was key, which was important for us, and we were quite pleased with the investor support on that transaction. The second part of the transaction is that whether we see more conservative investors like official institutions. Like I mentioned, that official institutions have always been important investor base for World Bank issues, and that's what we saw in that particular transaction as well. Were investors more reluctant to participate? And also the other part of the question, which would be similar, how different was the investor relation activity this time? In this particular case, we needed a little more, a longer period. It was not like a traditional transaction where we'd just, take a day or two to be able to just launch a transaction and simply price the transaction within 24 hours. In that particular case, the investor work we needed to do ourselves as well as CBA, we needed to have several discussions with the investors because, for one, we needed to educate the investor on the platform, how the platform would work. We needed to educate the investors or provide information on the legal framework because one of the additional documentation that we needed to provide was the platform rules. Because now the investors are placing their orders on this blockchain platform, the bonds will be held on the platform. The change of the transfer of ownership is done on the platform. So we had, in addition to our normal platform documentation, so the platform documentation that we use for all our bonds was similar in that case, but in addition to that, we had to have a set of platform rules and how the rules would operate. So we needed to educate the legal colleagues on the investor side. So there were a number of workshops, legal workshops, technology workshops, and like I said, that the investors had to put in the order directly and through an authenticated system where they had to use a key. So this was the additional amount of work in terms of the investor work that we had to do in this transaction, which was different. One of the things which was great that we were recently in Australia and had an opportunity to speak to the investors post the transaction, and we were very, very pleased with the feedback that we received from the investors. Since it was the feedback was very, very positive in terms of they also had a similar interest like the World Bank. Some of them didn't just see it as a financial transaction, but they saw it as an opportunity to really learn of that new technology.
Okay, thank you very much, Andrea. The next question is for Markus. Are you there still?
Yes.
Yes, fine. We have a question for you here that is, it's a very broad question, so I think you maybe need some time to answer it. I don't know.
Okay.
Let's see. The question is, we have spent a lot of time refining and improving the role of centralized markets. How will the blockchain technology alter this? It's an open question.
We think that development in the blockchain technology, so we are at the beginning of this technology, will help the market to have a broader base for the changes in the technical environment. So if you look back, we did our auction in 1998 on a paper-based process. Now, 20 years later, it changed on a really good way. So it's more efficient. It do not need time between the auction bids and the allotment. So within 2 minutes, the investor community knows about the allotment of the auction, and I think this helps. The new technology will help to bring us further, also from the regulatory perspective, that it's easier to interact with the investor community, that it's easier to issue at the market, that it's not necessary to sign a global certificate, and to interact with more investors, not only with the same investors. So that's more worldwide, and I think that's the beginning of a development, of a positive development.
Okay, thank you very much, Markus, for answering this a little bit tricky question, I guess.
Mm-hmm.
We're going now to the next question, and now we're going back to Paul. It's a question like this. If cash settlement is off-chain, does it mean that the settlement is not delivery versus payment, DVP?
Thank you. Yes, I think this is an excellent question. Because, as I mentioned, we did not have access to a central bank digital currency, we had to have platform rules and procedures that worked on the basis of a paying agent agreement. So CBA were our paying agent on the paying agent on this transaction. So once they had received all of the invested funds from each of the investors, they then acted on the platform to deliver the securities. But that delivery only occurred after all of the payments were received in that conventional way. So yes, on this platform, it's quite reasonable to say that it was not delivery versus payment in an instantaneous sense, but it was upon delivery of the security occurred as soon as payment was confirmed. Let me sort of add a little context to this again. So glancing to the future again, we've heard the phrase smart contracts a couple of times, and I think this is where we might see a significant innovation in the market. That a smart contract could be written to truly tie together the two events into a single atomic transaction, so that if all of the information sources can be read simultaneously, a smart contract delivering the security could be simultaneous with the receipt of the funds. I've heard somebody actually describe this as sort of intelligent money, that a smart contract with a digital form of cash could be written to ensure that these two things, delivery of the security and transfer of the money, occurred truly simultaneously. So I believe that DVP, it sounds like it's simultaneous, but it describes something which is currently not simultaneous, and that was exactly what it was on our transaction here. But true DVP, I think, is a future potential.
Thank you, Paul. We continue on the list of questions that they have received, and now we continue to a question for Andrea. And the question is regarding a little bit looking out from the developed market to the emerging markets. And the question is, do you see the emerging market countries adopt this new technology? And do you expect this platform to be led through government bonds, or would it be the push come from corporates? It's actually two questions, one about the emerging markets and one from which part it will be the push will come from.
Yeah, certainly when you see the potential benefits of the technology, it's definitely, if you look at the emerging market country or the developed country in the auction system, we could see the application, which we saw the example that was that it went through, colleagues went through today on the auction side, that emerging market countries can benefit from the technology. Now, for the auction system, I know based on my limited knowledge of some of what happens in the auction system, the information that's received that the countries are able to see from the primary dealers that participate in the auction. The ability of that particular platform is the ability to be able to have a lot more granular information on investors itself, on the end users. Because we actually run a node on the platform, we do have access to the ownership of our securities by individual investors. So I do believe that in terms of the efficiency that it provides, and some of the examples that we've mentioned, efficiency, transparency, and the additional information that the platform will provide would certainly be beneficial to emerging markets or developed markets, whether in the bond issuance processes, particularly the auction area. The other part of the question is that, do you expect this platform to be led through government bonds, or would the push come from corporates? Obviously, governments could do a lot in the capacity and the power to be able to move things, not just this technology. So if there is keen interest from government, setting the standard and leading would also help push that a more broader application of the technology. We do expect the private sector and institutions like ourselves. The World Bank has always been, have led many of those first. We issued the first swap, which is now a market that the world will benefit from, and it has been $1 trillion market. We issued the first global bond. We see this as an opportunity to help move the market in terms of looking of a broader application of this technology and how it can benefit the World Bank as an issuer and benefit on the market in our capacity of our development role, helping develop capital markets. So we do see corporate institutions like ourselves and government playing a key role in helping set the standard and the direction of this technology.
Thank you, Andrea. I would like to, not to go to the next question yet, I would like also to, Markus, are you there still?
Yes.
Yes, and this question about the government's role here in the development and versus what it comes from the private sector. Could you also elaborate a little bit on that one?
Yes. In Austria, as I mentioned, the Ministry of Finance established the Austrian FinTech Advisory Board, so to drive innovation in this area. So I think it's necessary on the one hand that you have from the government sector some incentive and some push forward, but we have also from, if you look at the private sector in Austria, one commercial bank launched a blockchain-based platform for loan issuance, and they did the first transaction in October as well. So there are both entities necessary in the market, the government from our perspective and also the private.
Okay, Thank you. And while you're on the line here, do you have any thoughts about the possibilities for emerging markets to use this technology?
Yes, because this mentioned commercial bank it's Erste Group. It's an Austrian bank with a broad business in the emerging markets as well, and especially in the Central Eastern market, and they can use this platform as well.
Yes. Okay. Thank you very much. Very interesting questions. We will now continue to a short question for Andrea and Paul to answer, both of them. Can the final owner of the bond be identified with this technology?
Yes. Yes, the final owners of the bond can be identified. I mentioned earlier that to be able to do so from an issuer perspective, you would have to have the ability to run a node on the platform. Running a node on the platform gives you the ability to see in terms of the ownership, whatever that resides on the platform. So you have, and since investors are putting in their order directly on the platform, you would be able to have, as I mentioned, the granularity of the individual investors on the platform. So that's key, and in terms of even when on the secondary side, when there will be exchange of bonds to the secondary, exchange of ownership, you would be able to also have that level of information that would be much easier to access than in the current environment where you'd have to wait for to get a report from the custodian. It's something that you'd be able to see real time, and that's one of the reasons the technology seems quite attractive to regulators, because they would have the ability to see real time those transactions and an individual basis.
Thank you, Paul. Would you like to add something?
No, I think Andrea covered that very, very well.
Okay. So let's go to the next question for you, Paul. The question is, you explained that one investor was backing out from the offering due to the internal rules in the end of the process, a couple of days before the closing of the transaction. So were there any lessons learned how to handle that operationally?
So we mentioned one of the lessons that was learned. I think the lesson that we drew from this was the lesson of the disintermediation of custodians as a potential in the market. So that was the lesson that we drew. I think, and Andrea may add to this, at different times as investors are looking to engage in an issue, some can drop out for many reasons. This investor, kindly shared the information about why they had to drop out. Obviously, it was a transaction that had a fundamental technology component, and so we had a good dialogue about why they were backing away, which was valuable to us. But I believe an investor, choosing not to participate in the run-up to issue would, while not frequent, would not be unusual. So I don't think there was a particular issue about how that would be handled. The platform allowed investors to bid online in real time, and once they do that, and the book is closed, there's an obligation for them to pay and for us to ensure that the transfer of the securities is made. Do you want to add to that, Andrea?
And that's typical, because there were a number of other investors that would have loved to participate in the transaction, but they were not able to get the internal approvals in time to do so. And that's typical to any transaction, and we see this as the first of many transactions, and those investors will have the opportunity to either invest in other new issuances or through the secondary market as well on the platform.
Thank you, both of you. Going to the next question, I'm going back to Austria, to Markus. Are you there?
Yes.
Yes. Now it's a question like this. Functions of a custodian are also valuation, oversight of the valuation process, and control. How would the blockchain platform assure or support these functions? Should I repeat the question or?
No, it's clear. Yes, there is potential. If you look at the settlement and if you look at the clearing systems, I think there is a potential that this technology can help to substitute at the end in this process, but I think it's on an early stage at the moment.
Okay, thank you. Now we have a question. I will just make a change in my order here. I take a risk, actually. And the question here is, it's a very open question that I will ask all three of you to answer and to think about. And the question is there a risk that this technology is a solution in search of a problem?
You want to start, Paul?
Paul could start, maybe.
Yes, and you abbreviated the question nicely. It was a long one, but it began with Nouriel Roubini's recent very vocal skepticism about blockchain and its usefulness. So I think it's a terrific question, very good point. It's really nice to hear healthy skepticism. So there seem to be a few elements in the question. First, there's a point made, in most countries there is no problem with trust in the financial systems. I completely agree with that. The financial systems work remarkably well. Use of the word trust in describing this transaction is about the potential for a database, if you want to call it that, or a record that is trusted by all participants might be able to change some of the structures embedded in the current financial market. So there isn't a question of the trust of the current financial systems, but there's a potential which stems from a trusted form of recording information that can be accessed by multiple parties that might change some of the steps in current market operations. I would refer back to the Australian Stock Exchange and their equity settlement system. There's quite a lot of information that ASX and Digital Asset Holdings out of New York that are doing that work for them online. But they make a compelling case that many of the internal transfers necessary to conduct an equity trade can be eliminated. So they genuinely believe there are risks that are removed from that market. They genuinely believe that efficiencies are going to be obtained in that market due to use of that technology, and that may be something you want to have a look at. The question, is there a risk that technology is a solution in search of a problem? I would say yes. The potential for the technology, I think, is obvious. I would refer back again to Bitcoin and how extraordinary it is. There's no owner, there's no central authority for that. It's essentially a large asset register on which new assets are being created about every 10 minutes. Now, those assets, digital form of cash, can be exchanged between participants without any other market infrastructure at all. That miraculous piece of technology, I think, is what drives a lot of the interest. The financial markets are clearly trying to take the technological gift that is in that transaction and seeing if they can apply it to market structures. But I think we have to be certain that the current market participants, the current consortia of players, might be trying to protect their current market position. They make money providing these terrific services, and they'll be interested in retaining those cash flows. Outsiders might use these technologies differently. They might be able to offer services differently. I mentioned this a few times in my earlier remarks. It's unknown. I can't tell whether current market structures will be able to adopt some of the benefits of this technology and adapt current systems and retain all of their current customers, or if outsiders will be able to more freely develop new architectures which customers and clients will move to. As I said right at the beginning, in Australia there's this very large fixed income market and there's this tiny little market. It symbolically represents a small group of people getting together to issue debt, to invest in that issue, to trade that issue in a completely different structure. So yes, there are good questions. I think it's really healthy to remain skeptical about where this will go, but I tend to lean on the side that these innovations will result in some structural changes to the financial markets.
Thank you, Paul. And Andrea, your view?
Yes, I think just adding to what Paul mentioned is that, yes, one should be skeptical that it could be, is it a fancy database system? But if you think of, some of the current inefficiency in the current structure, and if you just take one example of, being able to have just one record, one copy of a record that everyone could rely on. You don't have this massive amount of reconciliation that's done across the bank, across custodial, across the back offices. You see interest from many of the banks on blockchain technology. So there is no doubt there is some potential and some hope that there is a certain level of efficiency that can be gained that is potentially significant. And seeing the technology from that lens, as opposed to, because we do have several databases. We have had those databases existing for many years, but yet still we do massive amount of reconciliations, which takes sometimes days. Where you have a system where you could potentially be able to see things within even minutes, and people could actually rely on it. The security and the trust that exists in the current system could still be replicated in that new system, but you have that additional efficiency. So I think from that perspective, one could say, it's probably more than a fancy database, and there is some potential.
Okay, thank you, Andrea. And Markus, what do you think about this question? Is it a risk that this technology is just a solution in search of a problem, and it's more like a fancy database?
If you look at the actual situation, yes, this is true, but at the moment, and I think it's very important to learn on an early stage, because otherwise you won't find out how the technology could help and work in your favor.
Okay, thank you, Markus. Unfortunately, we have to round this very interesting webinar off now and end this session. So first of all, of course, I want to thank you very much, all of you, all the audience, of course, to listen and putting a lot of very interesting questions to us, making the discussions much more interesting. And thank you to Paul, Andrea, and Markus in Vienna, too. And I was supposed to sum up a little bit what we've been discussing now, but I have to say it's very hard for me to sum up this because it's a very hard topic for me, since I don't really understand the technology in deep, and we have a lot of discussions that have been, what you say, all over the place. But one lesson I have learned from this, that you can see that there's a lot of possibilities in this technology going forward. And it's a lot of curiosity, what is this future will lead to, what we will see in the future, and how we will, if this technology will change the function of the fixed income market, for example, and to change the environment that we as debt managers is working in. But still, there are very many challenges. We don't know so very much about it. We are just in the beginning of a long, maybe road forward a process. So it's a lot of thinking about how will it connect to the existing infrastructure, how is for example, what is the cost picture like that we don't really know right now. So we have both possibility, of course, and challenges, as usual in many programs. But as I said, it's a large interest, it's a lot of curiosity around, and we would like to learn more and more about that. So I think the future will be very interesting. So I would like to suggest that we already now set up a new webinar in 2028 and try to see what we will talk about blockchain in that part. Is it like that we have gone from, like, today everyone else have a smartphone. 10 years ago we had just a very dumb cell phone. So maybe this is the same start of something very, very large going forward. So once again, thank you very much for attending this. And thank you very much, Andrea, Paul, and Markus. And I will also like to thank you, of course, Josken here, and Amira, that making this webinar possible and chasing us, helping us, and setting everything up. Thank you very much, Amira. And I think Amira has a last word for you, too.
Yes. Thank you very much. Thanks for everyone who dedicating your morning or afternoon, evening, 90 minutes time with us. We hope you found the session useful. I will be sending the 3 slides that presented today electronically to all participants who are registered, along with a short survey. It will only contain 2 questionnaires. Will take a minute of your time. Be grateful for your suggestions and feedback for our future sessions. And the floor is open for our speakers. Any last word, Markus, Paul, Andrea? Otherwise, thank you.
Thank you. Well, I just want to say thank you to everyone who participated in the call, and thanks for your questions. I just want to end to say that we do not have the answers. We do not have all the answers. We're on this learning journey with you and everyone else. And we hopefully, as Mark said, probably in 10 years from now, we will be sitting back, we'll be looking back and say, oh, maybe what we thought is exactly what happened. Or maybe what we didn't think. So thank you again.
I would just add one thing. Amira was trying to make everybody happy by saying she's asking for some feedback on the session, very, very briefly. But if you have any other questions or thoughts about the conversation today, feel free to sort of write those in by hand over top so we can have a look at them. This has been a terrific conversation. The questions have been really interesting. As Andrea said, we're all still learning, and I hope we can perhaps learn together. So thank you. Markus?
Okay. Also from my side, thank you for the possibility to present our experience in this very interesting topic. And to sum up, invest in progress, invest in Austria.
Okay.
And buy World Bank bonds.
Okay, I think we have to stop now before this is derailing totally. Thank you very much again, and see you in 10 years. Bye.
Thank you. Bye-bye.